Alright guys, glad to have you on board again today. There have been some legitimate complaints regarding the fact that the English user base has been very well underserved compared to the French users, and I very well agree with that. It's just, well, I have a limited amount of time and I'm going to complain with that. Sometimes I just can't. So this time around I just wanted to kind of catch up on the relatively new elements that have emerged recently, so that you guys at least are on the same equivalent page. So I'm going to do this one real quicker. It's going to be an off-series kind of topic in here, just to try catching you guys on the model usages and stuff like that, and reminding the essentials to answer the trickiest question at the moment: what's next? Because of course I could very well answer that what's next in the couple of years time frame is we're definitely going to make it. What's going to be next in the next couple of weeks, I goddamn don't know. It's way too stupid. So we're going to try answering why through this video. Okay, so first element in here, I would tend to say that we're in a moment in time in which you want to be very cautious. Because, well, if you look at some tokens like Solana's and like, I just take this one as a rough example because it just shows how stupid the market have gone, which means some assets have made all-time highs of their 2021 top, of course. I mean, if you're looking at Sol in market cap, it did, but it's just one of others who have succeeded making all-time highs so far. So only Bitcoin did with fundamentals. That means the Bitcoin fundamentals have improved significantly enough to justify new all-time highs. Solana haven't. Some people may say, yeah, Solana is making revenue, but I can quickly destroy that narrative very simply. It's just a handful of robots competing each other to scam users who are gambling on meme coins, and these are the ones who are paying the high fees. No one is paying higher fees on the network despite these robots. On the other hand, the robots are the ones who are the receiving end at this fee metric as well, which means they're generally operated by validators, which means you're basically spending the money you're receiving on the other hand. So if you're both the sender and the receiver, the transactions bear no value. So the revenue scam we see now on Solana, yeah, it's a scam, frankly speaking. If you're sending and receiving on both ends, you're actually just transferring nothing. You're not transferring wealth from one person to another. So be very cautious with that. There are lots of questionable fundamentals in the Solana ecosystem. And it's not the only one out there. So that's the reason why I give you a kind of a cheat sheet in here to try figuring out how to properly remain sane and solvent in such a troubled environment. Because to me, there are three categories. And I'm going to start with that. There's the first category of kind of legitimate actors working on real problem solving, in which blockchain technology can bring something valuable, not necessarily immediately, but it will serve some legitimate purposes in the future, where nothing else but blockchain is going to be suited for the task. This is where you're going to be finding market fit and finding revenue sources which are not incentivized or temporary. Because there is the category number two. There is the attention war which we're in now. It's the exact same thing as the ICO bubble in 2018. That's a bubble, and this time around that's the bubble around meme coin shittery stuff. Basically anybody can launch a token and build cultural value against it. That's basically a war for attention. That means people are in here for the ride of the volatility stuff. So it's basically just trying to create as much volatility and momentum and marketing material to try reaching out to as many potential scam than you can. It's just basically trying to scam as many people as you can, because that's how it is. It's a bubble. There's no value being created because there's no utility from these tokens. It's an attention game, and attention rolls constantly. It's there for now. It's starting to wind down and will likely vanish and disappear, just like all the money invested in those stupid ICOs back then gone to zero and got liquidated. The thing in here is, if I can get you the best analogy of it, is, well, these are equivalent to Ponzi scheme. There's only exactly the amount of money that gone in that will ever go out of this. So it's all there is. It's a musical chair game. You might go up so long as people put more money in that people are asking for the money out. When people will start asking for the money out, there will not be any additional dollar than everything that's been put in. So it's all there is. We know how it's end up. It's a Ponzi. It's going to go to zero. It's just a matter of time. And if you want to trade your way in, make sure you're not the last stupid guy buying at the top. And when it reverses, just get the fucking hell out of it. Just to say, we have all evidence that it already started to collapse, so it's not an appropriate amount of time to go into the main Ponzi scheme. And there's the third category, the most dangerous one, to be honest, is all these folks who are trying to plug the blockchain technology into every kind of buzzword out there, out of kind of the blockchain industry, like blockchain in AI, blockchain in gaming, blockchain in this, blockchain in that, blockchain in whatever. This is freakingly dangerous because these guys if they know what they're actually talking about, they know the blockchain doesn't fit any purpose in this area, and they're just kind of trying to connect two dots, thinking that anyway people are stupid enough to buy it, and that's once again just people trying to sell a token. They're raising VC money, trying to build somewhat of a minimum viable product, or sometimes even crafting a very well product, but it once again isn't market fit, which means there's no way this thing can sustainably make revenue. There's one thing you need to understand: the blockchain is more expensive than what we are building up on, which is Web 2. Servers and stuff like that. So you know that we have shared servers, we have shared databases access and all sorts of things. It works very well with an API and all sorts of stuff. We do have a Web 2 environment with those kind of big giant database silos hidden behind big doors of Web 2 businesses who collect all this data at your expense, and now eventually we face the problem of censorship, which means these guys can censor information, and as they are the only ones relying and relaying information out there, it poses a significant threat. So we're going to start to need Web 3 as Web 2 is crumbling under its own weight, and the fact that just 4 or 5 names are handling so much power now that they're actually starting to pose threats on censorship and immutability of the data. So that's the state we're in. Anything else is category number 3 to me. They don't serve any blockchain purpose. They could be operated at a much cheaper cost into classical Web 2 infrastructure, centralized server and so on. And we don't need public blockchain costly infrastructure to run them. Okay, so 3 categories. The stupid temporary attention game which we're in, it's going to pass, and it's just going to be something that will wait no more than just a single sentence in history. Just like today, we will mention eventually the 2018 ICO bubble. It went up, went down, created nothing, just a line on the history books. I think the meme coin shit remania we're experiencing now is nothing but that. It's nothing more than that. It's exactly just that. It's going to be a line in the future history books of the 2024 stupid mania. Okay, then that's it. The value will inevitably be created for those who are solving real problems in which the blockchain technology is well suited. And there are all the other ones who are using the fancy name of people who don't understand anything. They're actually scamming you out there. They're generally leveraged with high amounts of debt because they need to build fast on the momentum, and they generally require heavy amounts of VC investments. These guys are in it to sell. They're in it to just sell you the tokens and get out with the money. They're here to get rich, and you're going to be the exit liquidity. I think these are the most dangerous ones because these guys most of the time know what they're doing and they're outright lying. They're using fancy, well-known strategies like over-marketing and all sorts of stuff to lure you in, and once you're in, you're locked. They're generally doing exactly that. They're building manipulated communities, letting you believe that this is solving real problems, whatever. When you just question the narrative, it generally falls and crumbles under its own weight. So today, I'm going to try giving you a framework to efficiently differentiate within those 3 categories, okay? Because, well, once again, you just don't want to blindly trust me and follow me on saying, I know who the right ones are and I know who the fake ones are. I just want to give you a framework of reference that help you define who is what. And it's really important to figure that one out. I'm going to give you some models that belong to me, some models that don't belong to me, so that once again, nothing should come out from a single centered sources. Otherwise, you face problems. So I'm going to share all those models with you today. You might be familiar with many of them, but it's good to still have some of them in a single video. So the first one is understanding those 3 categories. How do you differentiate them? Well, the attention game is, frankly speaking, that's something that wasn't even existing 6 months away from now. So if you're trading something that doesn't have more than 6 months history, I don't even know what the fuck you're doing, but you're in a kind of an attention war stuff of something that's just been recently created out of an infinite supply, trying to gamble on your attention. It's generally heavily centralized, stupid, illiquid, all sorts of things. It's going to collapse. It's exactly like 2018. There were tokens pumping all over the place. So we're in oversupply now. The meme coin shittery stuff has reached its peak probably already. So just get the fuck out of here. If you played into it, understand that the game is over. Need to get the fuck out of here quickly. It's a Ponzi. There's not enough chairs for everyone to sit on. It's the first comes, first served. Get the fuck out of here now. Now, category number 3. This is the most dangerous one. How do we get ahead of those who are trying to sell you tokens that will never ever go down to the profitable end of the curve? Which means whatever revenue they might be showing today is incentivized revenue. Because it will be easy to say, okay, I'm looking on chain and I can see who's using that blockchain and who's actually paying the gas fees, who's actually being on the revenue side of the equation. Well, the problem is if those guys are the same ones receiving, then as you said, there's no value transfer. You both the sender and the receiver. There is no actual value being transmitted. Though you can't count that as a revenue. You can't be your own self-revenue. On the other hand, there's kind of this massive incentivization system where I spend tremendous amount of my own local currency to create fake activity on my blockchain, to try to lure you into thinking that some others are using it and maybe you should buy too. Faking activity. That's very dangerous. Solana is playing this game outrageously loud, and just a handful of fake data points are easy to see in here by just looking at the data itself. You would see that there's no more activity on the chain that had to be before. It's just that now people are paying more. And they're just the robots who are, like I said, the same validators. So they're just sending higher amounts of money between them and themselves. So it's just stupid, folks. Though it's the same out there for many other chains. So remember that revenue isn't a trustworthy, reliable source to rely on. Use cases. So you need to figure out what the fuck is a blockchain use case. Because out there, people will just try to lure you into things you don't understand and tell you, yeah, the healthcare industry pretty much need blockchain for this, this, and that, and we can solve this and that problem. No, it's not, okay? I'm going to try giving you the number one thing that will destroy 80% plus of these narratives by just following this. Understand that what you're actually trading with, or at least hoping to trade with, are most of the time public blockchain, which should serve public infrastructure stuff. Remember, the tokens you trade on public exchanges are generally for public blockchains, okay? Just quickly out of this, if you are trading a private blockchain, and there are some certain use cases in which private blockchains are going to be necessary, but there's not a chance you will ever see the token. And most importantly, there are more hybrid solutions, which are going to become very popular, I guess, in the following years. These are like stakeholder information blockchain, which means these are governed blockchain, generally I think Cosmos side stuff, which are going to be for those who are involved directly or indirectly with the system. But you as a retail who doesn't use some of these things, well, what the fuck of holding a token? You don't belong here. You're just a noise. You're just a bug in the system. Those systems will be using governance tokens, meant for people to use the system, which should be decentralized because they have diverging interest. We're going to come up for this, okay? But most of the time, what you're trying to buy is the public infrastructure. So let's consider that as a maze. You see there's a series of questions answered by yes or no, and that figures out somewhat of a stream flow, okay? So let's figure out that the easiest way to figure out if what you're trying to buy in is a relatively good asset, you need to pass the whole fucking maze. You need to go all the way from the entry to the exit, and the exit must be public, okay? So we know for sure that the easiest way to solve a maze, when you see the entire maze, is to start by the end of it. So let's do it, okay? So here it is. Do you value censorship, resistance, and immutability over efficiency? Hear that one very correctly. If your blockchain is selling you efficient solution, like speed or whatever, okay, you get the point, okay? It doesn't make any sense. You can value speed only if you guarantee censorship, resistance, and immutability, because that's what a blockchain does. Most of the time, to do censorship, resistance, and immutability, efficiency is going to be the trade-off. So I don't like when I see efficient blockchain stuff. It's just two words that don't come together. So make it easy on you guys. There might be an exception to the list. We'll figure that one out afterwards. But that's it, okay? So first question here, if your thing is efficient, whatever, in the white paper, just delete that fucking thing. The blockchain must not be efficient. It must be censorship, resistance, and immutability on the first level if you want to be a public blockchain, okay? Now, two other sets of questions. Is consensus determined by multiple entities? Yeah, very likely to be, okay? Otherwise, oops, sorry. Do you need to control read and write access? Okay, so that's really simple. If you don't need to control read and write access, you're fine. If you need to control it, then the consensus must be determined by multiple entities. Okay? Unknown entities, okay? So it needs to be operated by third parties which are not aligned. It's essential for you to be like that. Okay, working further down the rabbit hole, so at least in here you might need a blockchain, but will all the participants need to upgrade or replace the system? The answer must be no, because otherwise, if you distribute the system between a high number of operating nodes, is it really worth the cost? Blockchain is like replicating the fucking thing, both at the execution, the storage, and the consensus layer. It's inevitably much, much more expensive. And if you centralize just one of those three layers, execution, consensus, and data availability, you're going to end up in a mess because all three need to remain decentralized. And it's bearing a shitty high amount cost in here. So once again, efficiency is not a good point. It's generally a trade-off. Do you rely on a trusted third party? I mean, once again, if you can rely on a trusted third party, you freakingly don't need a blockchain. You rather like to not. Okay? Are the writers' interests unified? Because you need to have multiple writers, and the writers need not to be trusted. If you trust whoever is operating this system and writing on the system, the fuck? Just make it a Web 2 server. It doesn't need to be anything more than that, okay? That's really all there is. And all these other things, do many people need to write on it? That should be an efficient stuff. If your blockchain has one transaction per week, I'm talking about real, natural transactions, not just the faking systems in and out where the sender and the receiver are the same person. Real use cases of people willing to pay for the service. If there's just one people willing to pay for once a week, does it require this freakingly expensive regular infrastructure with multiple replicated servers all over the place, lots of cryptography added on top of? It's really not worth it. Okay? It's really, really essential. And most importantly, is your problem really needing a database? That seems like an obvious question, and the other two are just even more stupid. But that's the cheat sheet. Remember that out of this, if you follow the first line, I think more than half of the tokens that I see in circulations today are already erased because they just, most of the time, there's not that many people writing in here, or there's not that many use cases. And most of the time, the writers are the same ones who are actually operating the chain. So what the fuck is that? You don't need a chain. Do it Web 2 servers, folks. So you're buying into it tokens, which most of the people holding it are people who know each other with unified interest. To bear simple, most of the time, everybody who's buying the token is here to make money. So if everybody is here to get richer at the end than they were in the entry, and if there is no real value purpose and not other legitimate use cases, this thing is going to zero. You guys are in it for the same thing. You're all doing the same thing. You're all willing to buy, to sell to someone at a high price. It's just stupid, okay? Though consensus is an important stuff to get to a public blockchain, and it needs to be determined by a lot of entities. Absolutely a lot, okay? And those entities must not be trusted third parties. Otherwise, you have a problem, okay? That's how it goes. And otherwise, if you distribute consensus, you want to make sure those people are accountable and all sorts of stuff. Because otherwise, you're not censorship resistant, okay? So that's really all there is. It's really all there is. If you can pass this maze and get to a public blockchain, frankly speaking, more than half the candidate gets erased by the first line. I think another half gets erased by these two things in here, and those ones, it's even bigger. I think just another half gets to be eliminated by that, and I would tend to say another half is eliminated just by this one, because so many blockchains in here are not even valuing censorship resistance and immutability. They're just trying to go fast, and this is a very stupid trade-off. So that being said, that's the number one cheat sheet rule. You need to get very familiar with that one, folks. There's another one on top of, which means I try to lure you with that model, which I built, spend a lot of time crafting it and refining it, to say, I think blockchain ultimately face a fundamental problem, the trilemmas problem. I've already released a video around that, so I'm not going to go into the detail, and I invite you to have a look at the YouTube channel to figure that one out. Basically, TLDR is that the blockchain trilemma is that there's no single blockchain that can be both secure, scalable, and decentralized. At best, one blockchain can try to maximize one by minimizing a second and trading off the third. So that's all there is. But we could have a cohesive ecosystem where independent structures try to maximize one axis by sacrificing a second and being very bad at the third one. But as they partner, we should get an overall system that gets balanced enough. And to do so, we're talking about 6 potential candidates, making 6 different types of trade-offs, and maximizing the overall security, decentralization, and scalability of the system, so long as they work in collaboration. Okay, so that's what we want. But I don't think there's any more than 6 branches of actual public infrastructure. There's not going to be any more than that, to me. That's my model. Like I said, I've released all the data points on how I built it, with what logic and all sorts of stuff. I invite you guys to have a look at it. Okay? And the last but not least of the model, I think this one is very important for you to figure out, is that we're having multiple life cycles in parallel, which makes it even harder to figure out as one crypto market. Because there's like the short-term stupid stuff, which is just VC and momentum hype. This is basically the stupid meme coin mania. It's never ever going to be profitable. So these things have a dead end. It's going to die, and it's pretty much already being dead. So that's all there is. It's a stupid hype game. There will never ever be value created, and that's all it. The rest of is try to figure out those kinds of third category, which are just pretty much the same thing. They're trying to build on hype, trying to sell things, while in reality, they're just piling a tremendous amount of debt and never will be able to find sustainable revenue. So they will be like down the net loss curve and never will be able to balance the two, which means they're constantly raising the level of debt, requiring external capital to keep rising, because every bit of revenue that they're creating is created by $2 of debt. And by doing this, you're just digging your own grave further down the line each and every day. You're getting closer and closer to liquidation, because at some point in time, the financing flow will stop. And when it does, you will not bring any revenue. Worse than that, your revenue will collapse in the same time, and you will be dead by the instant. So that's all there is. These are all time-based game of momentum games. It's just try to to lure people in. And the most dangerous part of it is this. That's the money transfer going from VC to momentum traders. It happens when there is momentum. When the momentum starts to shift down, the VCs can't find sellers, and they are locked with their inevitable embrace with having external cost of capital to pay for, debt, and on the other hand, no revenue, which means they cannot get back down to the game of giving more money to these worthless tokens. And that's where the game generally ends and the liquidations start to happen. So that's the problem. You can build all sorts of hype, and like we said, there is a limited set of attention and there's a limited amount of capital out there. So people can just endlessly find new money and buy. But the problem is, well, when there's not enough money and when the hype cools down, it's a crash. So that's basically all meme coins and Web3 stuff. And third category stuff, which is basically they will never be able to figure out any suitable growth because there's no actually value being created and never will be. These guys are just trying to blend into things that just don't will together. It's just, I mean, you can try it as hard as you fucking can. You can't go against it. Most of the time, the blockchain is a much more expensive system than Web 2. So when there are some use cases in which Web 2 does perfectly the job, we don't need a blockchain. We need a blockchain when there is a risk for censorship and all sorts of stuff. And God knows that there are quite a lot of use cases, but most of the time, they will be blended with one of those 6 branches. And if you figure that one out, that's every viable use case of crypto, which needs to be censorship resistant and immutable, may have some specific use cases, like some certain areas of the healthcare industry, of some sorts of thing. Most of the time, you're going to figure out that these are consortium hybrid stuff, which means most of the time, they will be decentralized and interoperable. They're probably going to build themselves as consortium chains in the Cosmos ecosystem. These are sovereign chains which won't have a token for you to extract value with. It's how it is. These guys don't need you. They don't need fucking you. So get to understand that. If you serve no purpose in the system, what's the point of the fucking token but to sell you something at a degenerate price for you to be someone VC exit liquidity of some sort? That's the reality of it. 9 out of 10 tokens are just that. You're the exit liquidity because it will never find a purpose. Okay? So that's all it is. Once you have that right framework, yes, you can erase 99.9% of the tokens. And that's exactly what I do. That's the reason why right now I see a lot of noise, because there's these 3 categories competing for your attention. The scammers who are spending a lot of attention on the short-term momentum until it exhausts, collapses, and the musical chair game leave you with the losses if you were trying to hold these tokens longer than you should. On the other hand, there is the liars, the ones that just surf the wave of blockchain and think that there's some dumb capital out there. Anyway, there are people who don't understand nearly anything about it, so let's just sell them some buzzwords or whatever. Let's just make them fancy charts and nice looking front ends. They don't know what the fuck it is, but it looks great, so let's invest into it. It doesn't make any sense, folks. Okay? The infrastructure is limited to what I think is 6 branches. There's going to be one winner in each branch and no competition for them, because cooperation is the ultimate game of cryptocurrency. These infrastructure to remain sufficiently decentralized and all sorts of stuff are heavily costly. So they need to be targeting areas in which they can extract the margins. And the true legitimate users to pay for these revenues should not be the one receiving them. Should be other users. And if other users are there, they must be willing to pay for the service. And by paying, that means they need to get something in return. And it must not be the temporary hype of wanting to be part of something that you don't understand. Most of the time, the people who will spend money into a blockchain, in which you're going to be able to eventually extract a bit of value out of, is going to answer this question all along. You should be here to provide censorship resistance and data immutability. So most of the time, it's going to be either directly participating in the system, being a validator or a proof of stake, whatever. On other cases, you're going to be bringing the capital to secure. So you're going to be a delegator of some sort, either through a liquid staking system because you can operate or not, or using the decentralized delegated system of the Cosmos hub or whatever. These are the only areas where you can pretend to take some revenues because you provide a service. But the service you're going to provide to a public infrastructure most of the time is going to be censorship resistance and immutability of the data. That's all it is, folks. I hope you understand that now. There is no other value being created elsewhere. Some scalability chain may provide some value, but once again, what are you bringing to the table to scale those blockchains or to improve daily active users' experience? If you do not participate in this system, what are you in it for? Because if you're here just to take the rent and extract some profits out of an already freakingly expensive system, you understand that what you're doing is trading against time. The money will inevitably flow to where it is efficient. Otherwise, you're in it for a trade. You need to get in and you're going to need to get out. And if you do it right, you're going to take some nice gains. If you do it not right, you're going to be someone else's exit liquidity. And be smarter than that, folks. If you're jumping into something you don't understand, you need to have a framework to reference your choices. That's what I wanted to share with you guys today. I use these three models a lot of the time. The one that filters the most is this one. Then I try to figure out in which bucket it fills into and who is going to be able to extract some margin out of this. And how do I get to participate in a system to be worthily extracting a bit of a profit out of a service that I give. Okay? And that's essential for you to understand that. Okay? And last but not least, understand that there are different life cycles of assets. Some are already profitable like Ethereum. So it doesn't compete with any other things that are just momentum gambling or some sorts. Okay? It's really how it is. Bitcoin is in a much longer adoption scheme than Ethereum. So there is also a duration variable here. We have some short-lived stuff who have been doing the hype over the last 6 months. They're here and they're not even existing for 6 months. They've already gone through a stupid peak of hype and they're just still making tremendous losses and never will be profitable. So clearly, folks, there are some assets which lifetime isn't exceeding anything that like 2 years. And they will never recover because there's not going to be adoption. They're just lying to fucking you. They're going to die out of this because the next is this. And you've seen so many assets doing these peaks of hypes and never ever recover because there's not going to be any adoption, because it's just not a legitimate use case for crypto. But when there is one, you might want to be able to wait. It's really how it is. To me, the Cosmos ecosystem doesn't even have a peak of hype. I think we're really, really early. We don't even know if there is actually a use case for this. All we know now is that if VC starts to launch Cosmos chain instead of new L1s out of this, you might be having the sign of it. So that's all there is. There's no money to be made everywhere. But most of the time, like I said, I think the new chains who will launch will be in the Cosmos ecosystem, tokenless, because they will probably launch with ICS. And that's it. There's going to be token holder gated access for people who actually profit from this system, who will inherit the benefits of decentralization and immutability and trustlessness on the execution, because they operate a common infrastructure which they do not trust the other riders. Once again, if you trust all the parties writing in the fucking system, go for a shared Web2 database. It doesn't require cryptographic proofs on top of. But if you don't trust the actors, and if there's money at stake and all sorts of things, you might want to need cryptographic and consensus. cryptographic proofs and consensus. So that's all there is. I think we're going ahead of a tremendous adoption when we'll unlock the new use case, which I stand for, is coming from the private sector now. I think we'll see a lot more private and consortium hybrid chains in the future, more than new fucking L1 tokens trying to dump on the retail's faces. Currently, we face the most troubled moment in crypto's history, which means the true innovation hasn't landed yet. The infrastructure is getting more mature. We have infinite supply of shitcoin, meme coinery stuff, which is pretty much exhausting the momentum as of now. And we have a hell of a lot of scammers, which have leveraged enormous amounts of money through the latest bear market. We've seen billions of VC money poured into the market. A large majority of it is not going to be productive. They're fulfilling absolutely stupid niches, which they can either find market fit in niches, which means very tiny margin to be extracted out of it, and there will never be sufficient revenue for the expenses that have been spent with the debt, which means most of these tokens are going to zero, because the VCs are going to sell it, and there's never going to be enough market revenue growth to sustain it. And that's all there is. So be very cautious with that, folks. We've seen that the technicals suggest we might not start until 2026 for the crypto total, okay? And if we do not make this wave, this true legitimate adoption wave until 2026, there's not a chance the third category will end up alive. They will all die. If we're locked into another year of bear market with 5 to 6% interest rates, you're fucked, folks. There's not a chance your VCs aren't going to sell. And if they start selling with no utility in front of it, it's going down, back down, and it's going hardly down. So be very cautious with that. What's true and what's not can only be derived through time. In the short period of time, the latest 6 to 7 months that we've had was a nice rally built on hype, fake expectations, and all sorts of stuff. There truly have been some legitimate adoption, like the Bitcoin ETF, but that's the only true one out there. Ethereum as well has had large adoption through its layer 2. Despite that, no one else had legitimate adoption. Some may say Solana, but Solana has just this meme coinery adoption, which is totally fake, and those who've made the revenues are exactly the ones who paid for it. So it's not legitimate revenue. Solana is a good infrastructure, but it needs to find further evidence beyond the meme coin shittery mania. It needs to find true legitimate use case for its block space, not just so short-term bubble stuff. Okay? I would like you guys to understand that. I hope so. And I'm going to leave you guys with that to avoid a very long video. See you guys later. Bye-bye.